regardless of which administration wins the White House, the economic impact would be somewhat similar. Your question regarding the cabinet, I think, lends a little bit towards how far progressive or how far to the left we would go if we have a change in administration. I think that would be somewhat muted. It's exactly about the fact that Biden has said that his initial focus is going to be on the pandemic, and that's going to require continued stimulus. It's going to require focusing on putting money there. And I don't think that you're going to see the policies change dramatically. I mean, I know that you probably will see a tax increase at some point during the administration, assuming they win. But I think that it will be similar to what you're seeing now, except a different focus on the pandemic and how to handle it.
All right, back to the markets today, Mike. It looks like we're a little bit farther away from 33.86, 33.93, whichever record you choose to watch at this point. It's tough. You need to see technology take us there just because of the math of the markets at this point. But you have a real gravitational pull towards the cyclicals just because they are much more undervalued, underpriced in the market at this point. And people want to position themselves for that rebound.
Right. So the shortest path would clearly be for the winners that we've gotten familiar with, the ones that dominate the S&P, to just carry higher. Yesterday, Apple and Microsoft up almost 3% each. That did the job of getting this near approach to the old highs. I do think that, it's been tough to decisively say that there really is a tidal shift going on within the market. I think it's better to say that it's just become a little bit less exclusive in terms of who's driving the rally. So in other words, market kind of broadening out a little bit, giving a little bit of allowance for a better economic recovery. That early cycle pattern that people have wanted to try and play for a while maybe is kicking in for a while. And certainly it's gotten clearance like it did in May and into June from this declining national COVID case count rate, which, even if it's only temporary, the market can kind of extrapolate it for a while. So I think all that stuff in play. I don't know how much it matters that the market is hesitating here on an index level before the highs, because the other thing to look for is we're up 50%. In less than 5 months. And I think sentiment and positioning is starting to get a little more aggressive. So that might all come together at exactly that moment when we get to or through the high. And we have to sort of reassess and say, have we built in a little bit too much good news so far? But that remains to be seen.
Mike calls it the broadening of the market, Eugene. It doesn't sound like you're a buyer of this recent rotation that we've seen into the more value and cyclical-oriented stocks.
I'm not, Melissa. I think that on the positive side, it does indicate that the bull market is broadening out, and that's a good thing. But on the opposite side, I think that it's a little bit of a value trap. I think when you get down inside the fundamentals, stocks came down quite a bit when COVID started, and a lot of the growth in index has been a result of the FANG stocks, the large technology companies. But even within technology, if you look at a situation like Cisco, which is 19 PE, would be a value name. You have a situation where old technology is not being rewarded. They're really focused on enterprise servers and the Cisco router. They've been a little bit off going all the way back to their Scientific Atlanta merger. And so I think that overall, technology still will rule. I think that you have a lot more risk control in technology, and that's what the economy is